And a defensive sector like pharma always helps in times of volatility. But does that build a case for pharma funds? Let's find out from Dhirendra Kumar, CEO at Value Research. Dhirendra, pharma funds have always given a huge outperformance over the Sensex in the long as well as the short term. A, why is that, and would you recommend these funds to investors?
You know, the pharma funds have done so well over the past 3-4 years that it has led to, the long-term performance numbers, even going back 10 years, they get quite magnified. That's one. Otherwise, too, there is nothing questionable about pharma as a sector in terms of being able to deliver a far more consistent return than Sensex. Yes, the period between from 2004 to 2008, when the overall market did much better, pharma, lagged a little bit than the broad market, but that's about it. It has more than compensated for that period of relative marginal underperformance. That apart, even the pharma sector has undergone some change in terms of consolidation, in terms of the dominance of larger players, the quality of those players. So I think that universe is getting unified, and that has come in handy. General funds have not done well. So I would say that pharma is an essential component of any portfolio, and so pharma funds, you should have it. There could be a limited case, but if you hold a lot of, if you hold few equity funds, there is a possibility that you will have 8 to 10% exposure into pharma anyway, because that is the average exposure of general equity fund into healthcare stocks.
Dhirendra, SBI Magnum Pharma has been a laggard in the category over the 7-year, 5-year and 3-year period. However, if you look at the last 1 year, it's actually the best performing fund. What has changed for this fund?
Oh, this fund is just getting back its momentum. For 2-3 years, it was just out of favor. Maybe the way people, the equity fund managers at SBI just became very risk averse, and now they have become little venturesome, and they have taken. We see more proactive management in equity funds of SBI of late, and that shows in performance of quite a few funds, including Magnum Pharma. That apart, the portfolio looks very high quality. There is not and it's a very, it's not a large portfolio, and I don't find a single speculative name in this portfolio. It's just that betting, the relative weightages of underlying stocks in this portfolio has been pretty smart, and that I think has translated into the substantial, this great performance with the other two pharma funds that exist.
Okay, let's start addressing queries then on the MF Corner. And our first query, Dhirendra, today is from Devashish, and he says that he can invest 5,000 rupees per month in dividend yield funds via the SIP route, and he says he's expecting dividends of about 10 to 15% per year. And he's asking for some suggestions for some funds.
Oh, his question reflects one of the biggest misunderstandings. One should be investing in dividend yield fund for greater stability of one's equity investment. Dividend yield funds have delivered far superior returns, far greater stability over the past 4-5 years, and they have become a mainstream category from stage of virtual unacceptance from investors. You should not expect periodic dividend. If your need is periodic dividend, then go for MIP or something which is more likely to be, the downside is protected. And I think, the dividend yield fund has a very strong case for being a good part of your portfolio, maybe a third of your portfolio, maybe a half of your portfolio. And for conservative investors, it could well be, substantial part of your portfolio. Simply because they are likely to be more stable. They will not participate in a great bull run if we are faced with one, which looks unlikely in the near future. But as and when it happens, they will be relatively more stable. They are unlikely to be a very racy category.
Dhirendra, the second query.
If I have to choose a couple of funds, I would.
No, complete your point. If you want to choose a couple of funds.
If I have to choose a couple of funds, there are quite a few options here. There are about 7-8 funds, and if I have to choose one or two, I would say Birla Sun Life Dividend Yield or UTI Dividend Yield. They have made a very strong case for themselves.
There is the second query, not from a viewer, but from us here. The Prime Minister is suddenly taking stock of the mutual fund industry. We understand that that he's asked top Finmin officials to meet officials from the mutual fund industry to look at plans to revive the sector. What's your sense? Do you think the government may now revisit the controversial entry load proposal?
No, I think entry load proposal is a very small thing. I think the biggest thing which plagues mutual fund industry is its inability to attract long-term savings into the market through mutual funds. And if there is a pension provision whereby, all the mutual funds in the country, if there is a plan which is a pension plan, which have any fund which has over 3 or 5 year track record, this could be a huge boost, and this can be done only by a finance minister who also happens to be a prime minister, because anything lower than that it will require carrying a lot of constituency together. And this is going to be, and that is something which will have lasting impact. It has the potential to revolutionize our capital market and attract long-term capital into the market of a scale which is unthinkable. So I think that could be one big thing. I think entry load, revisiting entry load and all this is very trivial issue compared to what I am referring to.